Welcome to our latest video, where we analyze the latest financial results and valuation of Regal Rexnord, who is part of the industrial sector. The industrial and manufacturing sector in the U.S. is facing unprecedented challenges in 2023. From supply chain disruptions and cyber attacks to labor shortages and economic uncertainty, these companies must overcome many obstacles to survive and thrive in the market. But they are not giving up. They are adopting innovative strategies, using digital technologies, and building resilient networks to cope with the changing environment. In this video, we will explore Regal's performance and valuation. It is a company that could be a good stock to add to your portfolio to not just grow but also preserve value in a volatile market. So, what does Regal Rexnord do? It is a leading manufacturer of power transmission and motion control products such as gears, couplings, bearings, motors, and drives. They serve a wide range of industries, including aerospace, mining, food and beverage, water treatment, and renewable energy. One of the reasons why they are so successful is their diversified and resilient business model. They have a balanced portfolio of products and markets, with no single customer or segment accounting for more than 10% of their sales. They also have a global footprint, with operations in 24 countries and sales in over 133 global sites. This gives them access to high-growth regions and protects them from regional downturns. Let's have a look at their history as giants in its industry. The story of Regal Rexnord begins in 1892, when a young engineer named Christopher LaValle founded the LaValle Manufacturing Company in Milwaukee, Wisconsin. LaValle had a passion for innovation and quality, and he developed a new type of chain that was stronger and more durable than the existing ones. His chain soon gained popularity among farmers, miners, and industrialists who used it for various purposes such as conveying, hoisting, and driving machinery. In 1919, LaValle merged his company with the Rex Chain Belt Company, which was another successful chain manufacturer based in Milwaukee. The new company was named Rexnord Corporation, and it continued to expand its product portfolio and market presence. Rexnord bought several other companies over the years, such as Link Belt Company, Stearns Electric Company, and Falk Corporation, adding more capabilities and expertise to its business. In 2021, Rexnord Corporation merged with Regal Beloit Corporation, which was a leading producer of electric motors and generators. Regal Beloit was founded in 1955 by James Packard and Henry Neupel in Beloit, Wisconsin. The company started as a small manufacturer of cutting tools and gearboxes, but soon diversified into other areas such as electrical components, power generation, and HVAC systems. The combination of Regal Beloit and Rexnord created a powerful synergy that enhanced both companies' strengths and opportunities. The new company was renamed Regal Rexnord Corporation in 2021, reflecting its heritage and vision. Today, Regal Rexnord employs over 29,000 people. It offers a comprehensive range of products and solutions that help customers improve efficiency, reliability, and performance in their operations. What were some of the obstacles they had to face to get to success? Regal Rexnord has undergone a significant transformation in recent years, evolving its sales mix by application to focus on automation, power transmission and industrial powertrain solutions, which represent over 60% of its sales. However, the company has faced obstacles in the form of destocking and pockets of weaker underlying demand in certain segments, such as power efficiency solutions. This has led to a modest decline in organic sales by 4% in the first quarter of 2023. Despite these challenges, Regal Rexnord has shown strong resilience in its margin performance due to its ongoing 80/20 and lean efforts and merger synergies. The company's adjusted EBITDA margins in the first quarter were solid, coming in at 19.7%, in line with expectations. The company is also putting a particular emphasis on inventory reduction and free cash flow generation to delever its balance sheet quickly. Looking ahead to 2023, Regal Rexnord sees obstacles in the form of destocking and softer demand in consumer and short-cycle industrial markets, particularly in residential HVAC, pool pump, and certain short-cycle industrial markets. However, the company also expects positive momentum in later-cycle industrial, aerospace, energy, medical device, and non-residential markets. It continues to model better orders performance in the back half of the year, especially in the fourth quarter as destock headwinds are likely to abate, and growth initiatives continue to gain momentum. Ultimately, Regal Rexnord's focus in 2023 and beyond will remain on execution. The company believes it has many opportunities under its control to create value for its key stakeholders through its backlog, new product pipeline, cross-marketing synergies, significant ongoing 80/20 lean initiatives, and accelerating improvement in its working capital metrics. Regardless of macroeconomic challenges, Regal Rexnord is confident that executing these self-help measures will drive growth and success. In addition to their focus on the future, they have made a large acquisition. Regal Rexnord's recent acquisition of Ultra has put the company in a strong position for future growth. With a broader portfolio of more technology-rich subsystems and digital solutions, poised to serve a wider range of customers and end markets. The company's transformation allows it to approach customers as a trusted advisor, a significant evolution from its legacy market position as more of a component provider. Their market exposure today is inherently stronger than it was just a few years ago. Its exposure to markets with secular growth tailwinds, including automation, power transmission, industrial powertrain solutions, and residential HVAC, raises its exposure to these markets to over 35%. Adjusting for the faster growth expected in these markets puts them on track to have over 50% of its sales generated in secular growth markets by 2025. With these moves, the company is well positioned for future growth. Let's review their latest financial results. Regal has released the Q1 23 results, and the EPS has gone from 1.86 in Q1 22 to a loss of 0.09 in Q1 23. The market did not react well to this news, but you have to look deeper into why these results happened and if it is a one-off bad quarter. The Automation and Motion Control segment reporting organic sales up 11.7% from the previous year, reflecting growth in data center, aerospace, and food and beverage markets. Orders within the AMC sector for the quarter were down 4% on a daily foreign exchange neutral basis, however, book-to-bill for the quarter was 1.1. The Industrial Powertrain Solutions sector saw organic sales increase by 1.3%, while Power Efficiency Solutions saw a decline of 15.9% due to significant channel destocking activity. Their net debt to adjusted EBITDA ratio stood at 3.96 times, while free cash flow was reported to be $174.4 million for the quarter. The company has updated its financial guidance to include Ultra, and its expectation for free cash flow conversion this year is at least 100%. The company expects to generate at least $600 million in free cash flow in 2023. Inflation and a poor performance in the Power Efficiency Solutions division has driven the Q1 23 EPS loss. Management have provided forecasts per segment, and it appears positive now they need to execute on their plans. Using a nifty tool from Simply Wall Street, I can look at the trends they are forecasting. Then quickly perform a valuation in an attempt to see if there is a gap between the share price and the valuation. Model assumptions are: discount rate, 9.5% based on the risk profile of Regal. Perpetual growth, 2.5% based on market trends. Based on this analysis, I view them as undervalued. Regal has done a good job of acquiring many good companies over the last few years, especially with the latest purchase of Ultra. To meet this hefty 20% increase in earnings, they will need to generate synergies and hit the revenue targets they have communicated to the market. It is also a good idea to look at some of its peers and how they stack up together. Here the Simply Wall Street tools come in handy. Comparing the P/E ratio of Regal against its peers. From this analysis, Regal Rexnord is overvalued considering its peers in the same industry. Even though I would consider RRX a long-term investment, there are risks to this valuation. 1. Exposure to materials that attract significant inflation that cannot be passed on to customers or managed with procurement processes. Inflation has shown stabilization in the U.S., but there is still a long year ahead. 2. Reliance on acquisitions to drive revenue growth and earnings. RRX has spent significant money on the purchase of Rexnord in 2021, with a purchase price of $4 billion, and Ultra in 2022, with a purchase price of $4.95 billion. If synergies are not realized, it could be hard for management to justify such a purchase to investors and analysts. 3. Balance sheet is overloaded with goodwill of $4 billion and intangible assets of $2 billion. This is driven by acquisitions over the last few years. These kind of assets are more exposed to impairment charges due to economic uncertainty or downturn in a market or sector. If management is not able to increase earnings with the Ultra integration, we might be looking at large impacts to the bottom line due to impairment charges. Even with these risks, there are much upside to gain if management does execute their plans. In my opinion, Regal is a good long-term investment because of their commitment to quality, customer service, and product innovation that has led to sustained growth and profitability for over a century. The company's focus on self-help initiatives such as growth, margin improvement, and working capital optimization, combined with significant cost synergies and other cost savings initiatives, make it an excellent long-term investment opportunity. Despite macroeconomic uncertainty, their strong position in key markets and ongoing focus on financial performance make it an exciting prospect for investors looking to invest in a resilient and innovative company that is well positioned for growth.